Let's turn our attention back to Allianz. Last year was a record year for natural disaster insurance claims, but it wasn't enough to stop these boys and girls. Allianz raised the dividend to €8 a share. The company said it's going to announce that it was on track to deliver on its 3-year targets. Giulio Terzariol joins us now. He is the Allianz CFO from Munich. Giulio, good morning to you. Welcome to the show. Good to have you with me. You've beaten the magic number. The market had you penciled in for €7.9. You've upped the dividend. Sir, what the market wants to know from you is, if you're raising the dividend, are you perhaps a wee bit less interested in doing acquisitions 2018? Help me.
Good morning. So we raised the dividend, as you noticed, to €8 per share. And this is also following our policy that we pay 50% of our net income. What we do with the deployment of the excess capital and excess cash that we are generating, we are clearly interested in looking into acquisition. But as usual, when we look into acquisition, we want to have the strategic fit, the cultural fit, and the numbers have to add up. In the case we cannot tick all these boxes, then we go back to paying dividend in excess or to pay buybacks. But fundamentally, nothing has changed in our philosophy and approach to capital management.
In terms of the kind of targets, Giulio, that you may be focused on, I mean, there's a lot of competition out there at the moment. There's some very distressed sellers, I should probably, no need to remind you. Is it property and casualty, or just how picky and disciplined can you be at the moment? It's on your side. The market is pretty much on your side at the moment, isn't it?
Absolutely. Also, the market is on our side because we have really great results. In terms of our priority, in the case we're looking into M&A, on top of our list is property casualty. And then we also look into acquisition in asset management, especially acquisition that might add to the capabilities that we have. And we don't have a significant appetite for the life business, but both asset management and especially property casualty are definitely on the top of the list.
So if that's the top of the list, do we have to wait? If a shareholder looks at your stock, I've got to make a balance whether I'm going to get a share buyback or more dividend play, or wait for a big capital re-rating from you on an acquisition. How do I balance it? Is a share buyback still something the shareholder could perhaps hope for 2018?
You know, we are in the process of completing our second buyback. We did $3 billion of buybacks in 2017. We are doing now $2 billion buybacks. We are going to evaluate our options in the course of 2018, and then we are going to look at what is the best way to deploy the capital that we have. What is important to understand is that we have capital to deploy. If we can deploy this capital at above the cost of capital, we're going to do so. If we cannot deploy this capital above the cost of capital, then we are going to go back to use buybacks as a means to give a return to our shareholders.
Now, a lot of people who watch this show, they tend to see the other part of your business perhaps a little bit more front and centre. I'm talking about PIMCO. At the end of the third quarter, we saw quite a big inflow into the PIMCO business. How is it done in terms of inflows in the last quarter of the year?
Yeah, when you look at the PIMCO inflows in the last quarter of 2017, they had about 40 billion of inflows. When we look at what is happening right now in January, they had about 15 billion of inflows in a US dollar denomination. So the flows are very, very strong. We see also a nice diversification between institutional and retail investors. So not only the inflows are strong, but I would also add that the quality of the inflows is pretty good.
You certainly won the inflows in Europe, didn't you, into Dana Vassen's fund. He's a star. He takes on that mantle, doesn't he, really, as sort of the golden bond man. How did his fund do in terms of inflow, and where have the funds flown in from? Is it Europe that's driving the inflows for you?
In the case of PIMCO, we get inflows both in Asia, also in the US, so it's very, very diversified, I would say, but clearly there is a lot of strength in the US and a lot of strength in Asia.
Are you worried at all? I started this show, and I started a show saying nearly $1 trillion flew out of the third biggest bond fund in the world. That was Wednesday. Have you seen any kind of momentary pause for thought in the past 5-7 days? I'm talking about the window of volatility in the bond market.
Yeah, we didn't see this coming through, but clearly we are watching that, because when you see some volatility in the market, this might potentially affect for a short period of time the inflows. We didn't see anything for the time being. Overall, I believe that especially if you are thinking about increasing interest rates, I believe that's ultimately a positive for our asset management business. So we might get some volatility in the short term, but fundamentally, I would say that increasing interest rates are going to be a positive for our franchise.
We printed a story last week. I just want a little bit of confirmation, if I can get it from you at all, Giulio. It's XL. Are you in talks with XL? I mean, this would bolster your US side of the business, fit beautifully with everything that you've just said to me. Are they on your target list in the United States?
You know, we don't talk about speculation also because Allianz is always associated to all possible targets. What I can tell you about M&A is our thinking, which is about we're looking for companies that have a good strategic fit with us. They need to have a cultural fit, and also we need to be sure about the fact that we're going to get a return about the cost of capital. So this is all what I can tell you. I can add to that, as we discussed before, that property casualty is on top of the list, but that's all what I can say on this topic.